So welcome to this week's Bay Area Real Estate and Mortgage Update. I'm here with Rob McCarthy, and this week we're going to talk about what's going on in the real estate market and unemployment numbers. Rob, it's always good to connect with you, man. How's everything going?
Things are good, Noah. Good to see you too, buddy.
Yeah.
Been a
So
busy week.
What was that?
It's been a busy week, Noah.
Yeah, it's been a lot. There's a lot going on, and I know I'm getting a lot of inquiries about what's happening in the financial markets, what's happening with real estate. I imagine you are as well.
Same. Yeah, interest rates have really dropped. It's crazy. Anything below 765, rates have dropped down to the 3 mark. Which is great. The jumbo loans still stay high unless you're doing like a hybrid, like a 7-1 or a 10-1, which is like 3.5 to 3.75. But on anything conforming, which is basically 765 and below, it's really dropped. Again, 3%. It's definitely causing people to refinance. It's also interesting with interest rates dropping, it's getting people off the fence about thinking about buying again because interest rates are so low. So
that's helpful because we were just talking about a client I have that's got a max conforming loan, and they asked me, hey, should we refi? And they bought 6 months ago.
Yeah.
And you had said that it would probably make sense based on where rates are at. So I'm guessing a lot of people out there that there's an opportunity for refinances.
Like that client of yours, they're at 4%, if they can get down to 3% or 3.25%, it depends on their loan to value and their FICO scores. There's obviously lots of variables to it. But we've been locking clients at 2.75 to 3.25. 15-year fixed rates are even lower than that. So it's quite interesting what's going on right now.
I hear you. Well, that's why we're providing this information. There's a lot of changes happening. I think a lot of people are reevaluating their financial situations, either making decisions about buying or selling or refinancing. And so let's dive into unemployment and take a look at where things, have progressed to this point.
Yeah. So as you know, we were waiting for California unemployment numbers to come out, and LA was the first to hit at 20.3, but finally the Bay Area came out. And so here's where they're at. I'll just start at the North Bay, 11.1 from Marin County. So almost, 9% lower than LA. Okay. San Francisco, 11.4. Sorry, not San Francisco. So here we go. Sorry. Marin was 11.1.
Yep.
Here's a small graph here. 12.6 was San Francisco. Okay. San Mateo, 11.4. Santa Clara, 11.7. Alameda jumped a little bit, 14.1. And I wonder if that was because of, all the stuff they do with the, refineries and energy, oil, quite possibly. And then Contra Costa was higher too, 14.5. What I noticed is the further you got from San Francisco, which is kind of, I'll call it the hub of high tech, unemployment rose. And so what's interesting though is with all this coming out, all these different reports coming out. Again, this is for April. There are these weekly reports that are released. And the news media is just all over this yesterday and today. So if you follow the Dow at all, Dow was up almost 600 points yesterday. Today, we're at 947 points. We're at 27 and change on the Dow, which is kind of incredible based on everything that's happening in the world right now.
Yeah.
But unemployment as a country has dropped to 13.3% as released today. So literally in a month, we went from 15.3, we dropped 2%. And that's because all of a sudden, hospitality is hiring again. People are traveling again. I guess all the airlines are seeing stocks increase because people are booking reservations again. And so all of a sudden, we as a country are going back to work. In some states, California, in certain places, still shelter in place. We won't get into that. That's more of a political discussion. But it's interesting how states that have reopened are seeing a couple things. One, not an increase of COVID cases, which is interesting. But people are going back to work, and again, dropping unemployment, raising the economy, strengthening the economy, which just says a lot of things about real estate, which I'm sure you're going to talk about. But bottom line is, with low inventory, unemployment not as high as we thought it would be, and demand in high tech, you know, the market is in good shape still. So you could probably talk more about that.
Absolutely. Yeah, well, thanks for, going over what's happening with unemployment, because as we discussed last week, I mean, has a big impact on the,
big impact
on the real estate market. And so I think before I go into the numbers, there is been question marks that a lot of people have of like, how is the real estate market going to respond to the pandemic and the unemployment? And a lot of us were waiting to see what the April numbers would say, because that would really show us kind of the effects of the shelter in place.
Right, indicators.
And so,
right,
exactly. So let's talk about some. To start, in April, single-family home sales, the median prices in all counties except Santa Cruz increased. And it's interesting that you pointed out Santa Cruz had the highest unemployment rate of all the counties.
Right.
So I just caught that as you were talking.
Yeah, no, it's interesting because it's interesting. They had the least amount of COVID cases, but their unemployment numbers were high. Now, what's high? 17.4. 17. That's high, which is interesting, right?
Yeah.
So,
which would make sense as to why prices would fall.
Right.
In Santa Cruz. Yeah. So I mean, it's cool to kind of cross-reference these.
Yeah, I mean, a lot of this has to do. A lot of this. I mean, all the unemployment it's all mostly factored in because of shelter in place. Right.
Absolutely.
If we didn't have shelter in place, unemployment would be low, very low.
Totally. No, that makes sense. Good news on the one hand, inventory is on the rise. So we saw things bottom out in March. And now as realtors and the whole industry in real estate is finding ways to facilitate business safely within the shelter in place guidelines, and buyers and sellers are coming out and wanting to participate, we're seeing the inventory up. So it's at 2.9 months supply. 3 months is common in California.
Right.
Now in the Bay Area, it's typically, a little lower, like two and a quarter, 2.5. So inventory up is a good sign.
Yeah.
On the flip side of that, though, in April, the sales were down in the greater Bay Area by over 30%.
Right.
And that's to be expected, as there was just less sellers selling and less buyers buying.
But really, there's shelter in place.
I mean, I think that's a fair representation. Yeah.
Right. Right.
Exactly. So, this time of year, we typically see the highest sales throughout the year in the spring.
Right.
But it makes absolute sense based on shelter in place. Now, the counties the counties that got hit the hardest in terms of sales were San Mateo, Marin, and San Francisco, all above 30%.
Interesting.
But their prices are still holding.
Yeah, so, no, that's a crazy part about it, right? That's why the Bay Area is one of the best places in the world to buy real estate. It's just amazing what it does. So.
Absolutely. And I think that's something I'm from Southern Cal, where I think real estate's fairly stable, but being here over the last 7 years, I continuously have to refocus my mindset around this is a different real estate market, and you got to look at the actual data. Otherwise it's easy to think this market's going to shift, when in reality the data suggests that the market's healthy and strong. So I think the next point, sale to list price ratios, which is essentially what did a property sell for in comparison to what it was listed for. And so those are all above 100% throughout the Bay Area, with the exception of Napa, which is at 99%. This means sellers are still getting, on average, sale prices above what they're listing the property for. I believe San Francisco was at the highest of all counties at 110%. So on average in San Francisco, even though sales are down, homes are selling for,
that's
a material amount.
Interesting data point, because it tells you that demand is still strong.
Totally. And that's, in kind of summarizing all of this, in June and throughout the summer, my sense is, both from what I'm seeing, reviewing the data, and just what I'm seeing out with my clients and dialoguing with other real estate professionals, there's buyers that have been impacted by shelter in place on a few fronts. One, they either wanted to buy and then the shelter in place happened and they were kind of put in a holding pattern. And so they were on Redfin, Zillow, doing all this research. And now the gates are starting to open up because it's becoming safer to go look at houses. So there's all that pent up demand. And then we have another category of buyers were the ones that have realized that through the shelter in place, they actually want a different type of property. And so there is an increase in buyer demand, and inventory has not risen enough to keep up with that. So from what I can tell, if the economy remains strong and unemployment numbers continue to decline, we will see a stable market at most conservatively, and we could continue to see rising prices. So, I represent a lot of home buyers, and I would love to see some more opportunities for buyers. And I do think they're out there, but it's not to the degree of a shifting market, which, I had thought maybe 6 months ago we would see. So, it's the data's in, and this is the latest on what I'm seeing in the real estate market.
Yeah, no, it's really interesting to watch, how these numbers, we'll see. I always say time will tell. We all have our opinion, but when I look at the Dow at 27, based on COVID, shelter in place, unemployment numbers, that tells me a lot about the economy. And I don't want to. I've learned not to be an optimist. I've learned not to necessarily be a pessimist. About this stuff. I've had some clients say, "Oh, you just wait. Second round of COVID," but we'll see. We'll see.
Yeah.
Meanwhile, Meanwhile, you still got to keep on living. And
that's exactly it.
And if you've been renting, it looks like rents may continue going up because of what's happening due to market conditions. And sometimes it's just a lot better to own the piece of property. At least you can fix your monthly expenses, whereas you can't necessarily do that with rents. So yeah, I think right now what I'm starting to see, at least personally speaking, our application rate is up significantly, not just for refinances because rates are low, but also for purchases. Yeah. People are getting pre-approved again. People are making offers, and people are going into contract on property. And I've seen a big kind of an upswing in that. And
absolutely,
I'll bet it continues, especially with the way just the economics are continuing to look. So.
Yeah, I'm with you. And, I think I remind or discuss with all of my buyer clients what their intention is around timing, because, like you said, none of us really know and can predict with certainty where the market's headed. And so I think, if people are clear that they're wanting to be in a home for more than 3 years,
totally.
I think there's a lot less risk of having any issues if they purchase. And so I think that's the most important thing, at this time for buyers, is be clear on what it is that you want and what your plan is. And if that's the case, you can prepare yourself, be informed, and make a really good home purchase. And as we've talked about many times, and much better than I do, having been in the Bay Area for such a long time, that this market is a strong real estate market over time. And so I'm with you. I think buying is good for the people that are in the right position to do it.
Exactly. And it's so easy nowadays to figure out what you qualify for. We have these great questionnaires. It's not a big application. We're just applying all this documentation just to get an answer. Client fills out a questionnaire, it takes them 10 or 15 minutes, and off of that, we tell them exactly what they qualify for. Of course, if they want to get pre-approved, then they need to supply all the documentation. But you fill out, all I need to know is a couple things. I call it IDA, income, debt, and assets. And if I know what that is and have an idea of your credit, I can tell you exactly what you qualify for. And then you can start looking at property with NOAA and get a sense of, what's available out there. And then, if you want to pull the trigger, you get pre-approved, and then you start making offers. And before you know it, you're a homeowner. So
you make it easy. I mean, that's one of the nice
try
things.
to. I know it's not easy, because I know it could be a stressful process, because obviously there's things called the unknowns out there. But long-term hold, man, a lot of wealthy people in California because they bought real estate long ago, and it just seems like it
Absolutely.
continues to climb just because of all the different things that California offers that a lot of other states don't. So
Yeah, no, I hear you, and I appreciate going over this, information, because I
yeah,
know it helps a lot of people out there, I think, that are watching, and I enjoy staying current with you
yeah,
on what's happening. So thanks, Rob,
yeah.
for
Thank you, Noah.
yeah, it's good to see you again, and
Yeah,
have
yeah.
a great rest of the Friday and this weekend.
Yeah, and to anyone out there, if you have any questions, always, feel free to reach out to us through our website or through via email or through, of course, our contact information below. All right, thanks so much.
Absolutely. All right,
Have
take
a great
care.
day. See ya. Bye.